trader and founder, pollinatedtrading.com. Today, continuing in the prop trading, professional prop trading course, we're going to be talking about how to succeed in prop trading. There's a little bit bigger picture. Pretty much what we've been focused on the entire time in this prop trading course is very little about the minor tactics, but more about what you need to accomplish on the day-to-day. So as your general disclaimer, past performance of these strategies is not necessarily indicative of future results. All statements in the presentations are the opinions of Pollinate Trading unless otherwise specified. So prop trading course, it is free. The only thing I ask is that you like this video, subscribe to the channel, and if you know a prop trader who's having some problems and needs some help, share it with them. Okay, so far we've covered why to trade prop, we've covered systems, we've covered risk management, and we've covered choosing a different type of the different type of prop firms. In this one, we're going to be focusing on how to succeed in prop trading over the long term. 90%, 96% of traders who try out for a prop program end up failing, and it's about 90% of traders who actually go live and they pretty much blow up their account within the first week too. So the problem with that is those traders are focused on huge wins, huge payouts like happening tomorrow. Very short-term mindset, very much like, let me just Lambo this up. And you know, the industry in general is kind of very much misled that quick gains, quick results, quick returns is how you play this game. And if you're taking your time, then you're grandpa, right? Pretty much you blow up an account, you'll reset, move to a different prop firm, blow up an account, reset. And that's misaligned to the long-term success, right? Just if you were to think in your mind, what does long-term success look like? What does a really successful person look like? The last thing you would consider, at least the last thing I consider, is somebody who starts something and within the first 15 minutes of it, they've had the most amount of success. They just instantly open the account and boom, oh, I made $25,000. Let's go make another $50,000 today. That's great sounding, but that's not what success looks like to me. And the reason I say it's misaligned to long-term success in prop, because if you go to a prop firm and you look at their rules, their terms and service and their rules and everything, prop firms literally, and I did use the term literally, define in their rules that a long-term approach is how they reward their traders. So the key here, and this is a mantra that I've come up with, and I stole it from Naval Ravikant, but I have added my little twist to it. Play long-term positive sum games with long-term partners. Okay, so if you're going to join a prop firm and work with a prop firm, you got to consider them a long-term partner for them to consider you a long-term partner. And with that alignment, you guys can do some really good things. First thing you want to do is just notice their payout conditions. A lot of the prop firms offer amazing tryout discounts, 80, 90% discount, reset fees, 80, 90% discount for the life of the account, all these things, right? But you'll notice that you can do those tryouts over and over and over, but even if you do, their payouts are only a portion for the first few months, okay? And that's a clue, because so many traders are just gonna blow up and do stupid things. They're not gonna partner with you as a partner trader if you're the sort of person who's gonna come in and blow up your account over and over, going for those big wins, right? Coming in, trading Fed day and just going, 10 contracts long S&P or short, bonds or something like that going into the big news event. And if you fail, okay, you reset for $99. If it wins, that's a $20,000 winner, and so what they do, because a lot of people do that, what they do is they say, okay, well, you can get a third, not even a third. Let's say you made $20,000 in that, and you come in and you can only make a couple $1,000s that first month of the $20,000 that's yours, and you do it again the next month and the next month, and by the fourth month they start giving you full payouts, and that's a clue. So until you pass that multi-month consistent profitability with risk reward in their manner, the way that they're saying that this is what we're looking for, until that happens, they are considering you a fee provider, basically a trader who blows up and resets over and over. And they make a bunch of money off of fee providers. Ultimately, what you want to do is you want to pass the multi-month period, not just of passing the tryout and staying within the risk parameters and making money in multi-month period. But if you can do it without blowing up, without doing anything wrong, then they will start considering you a trading partner. And when you move into trading partner mode, that's a little different. Think about it as friend zone and significant other mode, right? Zone. You're basically friend zoned with these prop firms until you can prove that you are valuable to them, that you are consistent, and that you are somebody that they could consider risking their money with in order to have a good future. Okay, so how do we get that is through mindset and expectations. Your expectations of performance and results need to be aligned with the prop firm. If you're there for quick, fast, explosive returns and blow up often, the prop firm will expect you to pay them fees, right? They're just looking at you as like, oh, this is a person who's going to pay us $100, $200, $300 a month. Every couple of months, they're going to do a $1,000 thing or something like that. And they're going to blow up, and they're going to be good for a good $5,000 or $10,000 per year in fee revenue. Gotcha. That keeps the lights on. To succeed, expect to stay with it for many, many months before it even slightly starts to pay off. The longer you stay, the better the payoff will be over time. The more consistent you are. The reliable source means they're gonna throw risk with you, behind you. They're gonna back you a lot more in those environments than they will somebody who just opens up an account and throws a max lot bid on an FOMC day or something like that. They know that that's just funny money. Now, let's get into trading stuff. Now, this is where we start getting a lot more into the details of actually trading and your mentality in a professional training environment over the long term. Okay, so you can have a high expectancy system with a great win rate and a beautiful equity curve, but if you can't trade that system, it doesn't matter. So your mindset is going to be your greatest tool or your worst enemy. Right? If you have an amazing system, but mentally you're just not capable of trading that system, you decide to go out and do your own stuff and go wild on it, you're not going to be able to trade that system, no matter how good the system is. Now, let's talk about why your mind is not your friend. Your mind is trying to protect you from pain. Your mind is not trying to help you win. It's trying to help you to not get hurt, right? Think about like the hundreds of thousands or millions of years of evolution that your mind, your amygdala, your fight or flight mind has been built over, millennia to keep you alive. Every time you heard a little ruffle in the trees, that's your mind saying that could be a tiger and I'm going to get eaten, right? This is what your mind is looking to do here. Also, this is why you feel 2 times the amount of emotion from a loss than you do a winner. How many times have you gone in there and had a nice $200-$300 winner and you're like, oh, kind of cool. And then you go in there for a $100 or $200 loser and you're just angry about it, right? It's because your system is built to reinforce that emotion. The education system didn't do anything to help you out either, right? You're punished for being wrong, right? They have this A, B, C, D, F grading system when you're wrong, and you were rewarded for remembering and recalling perfectly. You're not rewarded for how well you learn something. You're not rewarded for producing bespoke or interesting things. You're rewarded for remembering things that are easy to remember, because if you can remember those things, then they can grade those things against the other 30, 50 people in the class, right? If you are different than anybody else, it's a lot harder to be graded. And so we have a fear of being wrong. We've been created that fear for the last, 20, 30, 40, 50 years, however old you are. And it's just been reinforced by the education system and, your fight or flight system. And so when we get into trading, we still associate stopping out as being wrong, because being wrong means a lower grade, and our mind wants to protect us from that. So how does that manifest itself in its trading? Well, you skip trades that are part of your system. You override your position sizing. You don't take the stops. You let the trade go against you. You add to your losers as they go against you, hoping that you're at a dollar cost average at a better place. You take profits early because you don't want to let something run up $500 and get you out at $100. So you're worried of losing. You're not adding to your winners when winners are moving in your favor and you're in a nice trending environment. And then you just start taking discretionary trades based off of, oh, this smart person on Twitter just said something about interest rates or something like that. I believe them, and there you go. And this creates a death spiral. You start out trading your system perfectly, no mistakes. The thing about that is it gets very boring very quick. So you go out and you do something a little bit different, or maybe you stick with your system and you sustain a few losses, and you start being gun shy. And you don't take a short trade because, let's say, it looks bullish, quotes, air quotes around it. Or, you should take an 8 contract on your position size, but you're worried about the trade, so you take 2 instead. If you're hearing this and this is making sense, you need to remember this, because the alarm bell should be going off here. This is where you need to know to stop trading. When you start doing that, when you're undersizing positions, it says you need to buy 8 micro contracts here, and instead you take 2 because you're worried about losing, or you just take a trade that's you skip taking trades because in your genius mind it doesn't actually look like the correct trade, right? And then you watch it turn into a correct trade and you're just like, oh, why didn't I follow my system? So if you don't stop when that alarm bell goes off and you start doing those things, if you don't catch yourself there, you end up chasing the trades that you didn't take, right? You said, oh, I didn't take that short because the market looked bullish, and all of a sudden it starts going down and you're like, oh crap, I need to get in. So you start chasing to get in. So instead of making that 2-hour winner, 3-hour, 4-hour winner, 1-hour winner, you end up making like a half-hour winner, just a little bit, right? And remember, those wins are not as juicy mentally to your subconscious mind. You experience them as minor successes, but a similar loss you experience twice as painful. And then sometimes if you don't stop, instead of taking that 1-hour loser that you should take, you end up taking a 2, 3, or 4-hour loser because you're waiting for it to turn around. You don't want to be that idiot who puts a stop at, 392.25 and the market goes down to 392.25, turns around and rallies up to 4,200. You don't want to be that guy again. So you're going to hold out, and instead of taking that 1-hour loser, you take 2, 3, 4 losers. Now, in the game of trading, there are 5 types of returns. You have a big winner, and I consider anything more than 2R a big winner. A small winner is basically anything up to about 2R. You have a break-even trade, and you have a small loser, which is 0 to 1R or so, and a big loser, which is anything bigger than 2R. If you can do nothing else to just keep yourself on track, as long as you have a positive expectancy system, as long as you don't get into big loser mode, multiple R losses, you can stay in the game. The more you stay in the game, the more you can reinforce the opportunities here. So let's look at the course of 100 trades here. We're going to do a normal distribution, or a even distribution, I should say, of 25 winners, 20 big winners, small winners, break evens, and small losers on the first half of these up in here. Sorry, we have we got the yard maintenance folks. Okay, so let's say you have 25 winners at 2R, that's 50R. 25 winners at 1R, that's 25R. So you're up 75R. You have 25 break evens, and you have 25 losers. You're up 50R on that period. That means you've eliminated all big losers, and you just trade the normal way. Now let's look at it again. Even distribution, 20 of each. And instead of eliminating all of the big losers, we're going to keep them in. So you have 20 2R winners, that's 40R, 21 R winners, that's 20R, 20 break evens, 20 minus 20 losers or 1R losers, and then 20 2R losers. You're basically at zero. You've done all that and you lost everything. Where all you needed to do was just eliminate this bottom group and not taking any 2R losers, 1R or better losers, and you have had at least 40 or 50R on that distribution. Now, think about this. A 70% win rate, which is just epic, by the way, as far as trading systems go. If you were to think about what that would be in the education system, that's a GPA of 1.7. Like, who's running around bragging about a 70% win rate at school, right? But you do 70 winning trades at 2R winners, that's 140R, with 30 losing trades at 1R at a 1R loser, that's minus 30R. It's 110R over the course of 100 trades. That's a 70% win rate. That's a C minus student. A C minus student over course of 100 trades is $55,000 in returns, risking $500 per trade. Now, a 50% win rate, if you were to do that as a student, you have a GPA of 0. You are a failure in the school system. But as a trader, if you had 50 trades at 2R winner, that's 100R. 50 losses at 1R loss, that's a total of 50R in profit. Again, at $500 per trade, that's $25,000 in revenue. 100 trades, you can do that in a month pretty easy. So how do we stop the death spiral? First of all, you need to identify that you are spiraling. One thing that I do is if I say I'm not taking this trade because market looks bullish here, instantly the alarm bells come off. If I ever start adjusting position size based on my rules-based systems, then that's an alarm, and I know that the spiral has begun. For me, it's undersizing, or overriding trades. That's the alarm. It has begun. Stop now. So usually what I do is I take some time off, whether that's a day, a week, an hour, 2-3 hours, a month, and I try to change my chemistry. Right? So I work out, take an ice bath, go for a hike, listen to a good audiobook, just bum out on YouTube maybe or something. But I want to change my mindset. I want to put distance between my trading and the recovery. So why did you spiral? Remember, your mind is protecting you. Your mind doesn't trust your system. Your fight or flight mind isn't there trying to doing manual back tests and like day trading the system and learning all the ins and outs of it. Your mind's over there saying like, okay, where's the threat? Who's gonna get me? Where's trouble coming in at? How am I gonna get in trouble here? How do I protect the human that I'm here to protect? So you need to protect you need to convince your mind to trust your system. And it all returns back to manual backtesting the system. The more you can run reps into your mind, the more times you can get in there and convince yourself that the system knows what it's doing, the better you will be at getting yourself out of that spiral or avoiding that spiral altogether. So why manual backtesting? Manual backtesting rewires your mind's neuroplasticity. Basically, it's teaching you a new habit, a new way of doing things. So you can understand that your mind doesn't need to protect you from that loss. It, in fact, reinforces that taking a loss is a good thing, because then you can reset and wait for another winner. And if you took a loss, it's part of the system, right? No system is 100%. And taking losses is what a professional trader does. Your mind needs to believe that it's supporting you and convince yourself with confirming evidence that your system is good, has a positive expectancy. This takes effort. This is why you backtest manually. As if you were playing a sport. You don't just walk in saying, okay, I've read the basics of golf. Now all I need to do is just go play golf. I don't need to practice. I don't need to get better. I don't need to study. I don't need to get reps in. I just need to go and play golf because I know the stuff there. That's preposterous. And the same thing with trading. You just need to get the reps in, the right reps in, so you can build the habits and trade the systems the way they're supposed to be traded. And on top of that, backtesting is collecting the data. So you reveal the truth to your system, of your system. You reveal the truth to your mind of your system. Right? On this example, it's a 69.77% return. In school, that's a D+ student with an 80 expectancy, which is incredible. This provides that this proves that over the 43 trade example we have right here, Curvy made the Curvy trading system, which is this one in the example here, during this period of time, made 34R. Again, if $500 is, if R equals $500, that's $17,185 in profits. So that's a really good confirmation that your system is good if you can do this sort of stuff. Isn't day trading easy? Trading is easy and hard. It's easy to have a system that works. It's hard to trade that system perfectly over long periods of time. Right? When your mindset's dialed in, it's the easiest thing in the world, and when it's off, you just can't stop losing money, no matter if you are trading an amazing trading system. Your mindset, how many times have you actually traded a phenomenal trading system and you just blew it up because you were doing the wrong things? Really important is practice. The manual backtesting is practice. That I can't emphasize enough how important it is to do that if you want to be a professional trader. If you don't want to be and you just want to be throwing it at the market and going wild, then don't listen. I don't think you would have made it this far into the course anyway. Manual backtesting is practice. And by the way, I'm not talking about learning how to code and having the code do your backtesting for you. We're not talking about that. That is not what this type of professional trading is. That's algorithmic trading. That's different. But this is manual execution trading at prop firms. Okay. Paper trading is practice. You should be paper trading. You should be running on fake data, live data during off hours, even live hours. You should be doing all those sort of things. Keeping detailed notes and spreadsheets and journals of your trading is also practice. Reviewing all that is practice. You need to continue to practice. With a growth mindset, you can get better at anything the more you work at it. You are not born with the gift of trading. Well or not. You were not born with it. Nobody was born with the ability to, there might be 3 people in the world who were born successful traders somehow, came out of the womb and they know how to deposit money into a prop trading, into a trading account and open up their trading platform and just start going after it. Maybe there's somebody who does that. The rest of us, we have to earn it. This is one of the most challenging businesses in the world, prop trading. And if you're not taking it seriously, if you're thinking that just because a bunch of knuckleheads on TikTok and Instagram are waking up late and opening up their phone and buying a bunch of contracts and selling them real quick and making their quick, $15,000, $20,000 a day, then going to the Louis Vuitton store. If you think that's real, then keep going that route, son. I'm proud of you. But what I'm here to tell you is professional trading looks nothing like that. No professional trader I know, even the most successful traders I know, none of them take it so casually. None of them do it that way. They are committed, just like they would be to any sport. Any professional athlete would be committed to any sport. So I put together a bunch of tools at pollinatetrading.com/prop. So you can get access to the Curvy trading system, get access to the rest of these videos. There's some discounts at different prop firms in there, pollinatetrading.com/prop. And if you want the Curvy trading system, the discount code is prop50. You'll get 50% off on the Curvy trading system, which we kind of covered during this presentation. And if there's any questions you have, put them in the comments. Again, like and subscribe. I'm doing this for free. So all I ask is you give me a thumbs up, you give me a like, you give me a subscribe, share it out to anybody, and I'll keep putting these videos out for free for you. Hit me up. Any questions you got in the comments. Bye.